this is a big day. It's been long in coming. What kind of take-up do you expect?
Look, we're really excited to bring BITO, the first Bitcoin-linked ETF, to investors as an important opportunity for them conveniently to invest in Bitcoin in their regular brokerage account. And it's with belt and suspenders, if you will, in the regulated futures market and in a plain old ETF wrapper. So we think this is going to allow many people who've been waiting for an easy way to do this and a robust way to do this to now be involved and have it in their portfolios.
Simeon, do you think the average investor is going to understand the difference between a cash-settled futures ETF and a ETF based on the underlying, i.e. this is going to come with roll costs? Do you think the average investor, the investor that you're talking about, is this the right product for them?
Well, we want them to understand because, in fact, we think there are some key advantages. There have been several, in fact, a growing group of experts who have been writing that the futures market is one of the best places for price discovery in Bitcoin. You see this in other asset classes. As an example, in credit default swaps, reflect price more quickly than cash bonds. So to some extent, it's a feature, not a bug. And there's tremendous volume here too as well. The CME futures market trades 40% more volume than the largest US Bitcoin exchange. So it's not a second order choice. We think it's quite a robust one.
Some ETFs that track futures have gotten into some trouble, particularly when you have to roll over some of the futures contracts, et cetera, because there's a lot of selling on the front month. Did you guys structure it in any way that kind of helps that issue?
So we are focused on the front month because that has historically had very good tracking to spot Bitcoin, high beta, high correlation. To give you contextualize it, in the month of September, the average difference between the near month and the next month contracts on any given day was about 20 basis points. That would annualize to about 2.5%, which we think compares really favorable to lots of other ways you would get exposure. We run a mutual fund, BTCFX, running the futures-based approach to Bitcoin that we launched in July. And through last Friday, as an example, the Bitcoin reference rate that amalgamates a few exchange prices was up 51%. Our mutual fund running the futures strategy was up 52. GBTC, the Graysale Trust, was up 37 in that period. So we really do think this is a first-class way to have exposure to Bitcoin in addition to being a convenient way.
Do you think most people that use it, though, are going to be using it for price action, i.e. they're traders rather than investors? Because a lot of people are certainly buying Bitcoin for trading purposes. They like the volatility, they like the price action. You are building here a perfect vehicle for them. Why do they need Bitcoin when they've got you? And if they got you, is there a danger that the underlying actually becomes affected negatively as a result of that?
A couple of key points here to make. This will absolutely be a vehicle that will be attracted to both, we think, folks who will use it longer term in their portfolio, but also to the trading community. But this, again, is a really important and valuable feature of the ETF market. If you think about this, you buy and hold this for whatever it may be, 3, 6, 9, 12, 24, 36 months. One day, you need to monetize it. You're going to be really happy that there are traders involved in the space too to make sure that the trading is really efficient. So we think this is a landmark in the broader Bitcoin ecosystem that's going to bring even more liquidity to the marketplace in the evolution and maturation of it.